This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. Let's have a live look at Bitcoin. The CoinDesk Bitcoin price XBX index currently trading below $46,000, down about 2% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
El Salvador on a Bitcoin buying spree as the Central American country's Bitcoin law went into effect on Tuesday. El Salvador officially adopting Bitcoin as legal tender, and the country's president, Nayib Bukele, announcing on Twitter the country bought 550 BTC through 3 purchases this week. This chart, put together by CoinDesk's research team's Shui Hao, shows the amount of Bitcoin purchased and the announcement time. 550 BTC is in total is worth just over $25 million today. Of course, El Salvador's Bitcoin law was met with a fair share of turbulence. Bukele's political opponents protested against the Bitcoin law. The rollout of the government-run electronic wallet Shiba was marred by technical glitches, and the price of Bitcoin crashed, highlighting the cryptocurrency's volatility. The IMF, US, EU, and ratings agencies are eyeing the law with skepticism. But on the other hand, countries like Panama and Ukraine this week taking steps to introduce their own laws to accept Bitcoin or other virtual currency payments. And joining me now to discuss BTC price and other Bitcoin news is our Week in Review panel, CoinDesk Managing Editor of Technology, Christie Harkin in Toronto, as well as Managing Editor of Markets, Brad Keoun in Austin. The Dream Team, hello, welcome. Happy Friday.
Nice to see you again, Christine.
Thanks, Christine. All right, Brad. So taking a look at this flash crash on Tuesday, just a market correction happening in the crypto markets. What do you think triggered this flash crash?
Well, there's a lot of different lines on that, but the kind of the main line was that it was a little bit of expression of disappointment over the El Salvador thing. I mean, maybe I would compare it to kind of, what happened in the market when we had the halving in May of 2020. And, there wasn't really anything exactly that people thought specifically would happen when this event arrived. But maybe people have been thinking that somehow this would trigger like a huge, uptick. And when that didn't happen, then apparently there was, the specific trigger. Some people say there was one big over-the-counter trade with a big trader.
That's what I saw. And Galaxy Research said that one whale potentially triggered this pullback.
That is definitely that was one line, and then I was reading that there's like no way to prove that. It's basically based on anecdotal information from market players. But the big story that triggered a bunch of liquidations, which is just the same old story in crypto, is that people get crazy levered and things are looking a little over rich, and then there's all of a sudden there's some downward pressure and it's dominoes from there and liquidations, and that just accelerates the sell-off.
And so we're seeing the price settle down now. What's the new support and resistance?
Well, the key level that everybody's been watching is the 200-day moving price average, which is kind of the longer term trend. But people also see that as a level, people who are looking at charts, see that as, resistance or support. And we were above it, and we've traded, and that's generally a bullish sign when you're above that 200-day moving average, but we've moved back down and we're right at it now. It's right around 46,000, which is where we are. So people see that as a really critical kind of pivot level. If we're above it, things are bullish. If we're down, if we're below it, it could be a sign that things are turning a little more bearish.
And from what I understand, nevertheless, long-term holders and whales, they're still accumulating, and the short-term holders, however, are the ones that are bringing the price down.
That is what the blockchain analysis data shows. Of course, it should be said that just like, with some of the technical analysis or even fundamental analysis, you can always pick your data point for whatever case you're trying to make. So, in this case, this is like a way of trying to reinvigorate a bullish narrative. A lot of times these blockchain data are interpreted post facto, or they're interpreted based on whatever people's books are. But yeah, that is what the blockchain data are showing.
Mm-hmm. Well, hindsight is always 2020. All right, Christie, taking a look at the Bitcoin network that went through another difficulty adjustment upward. What can you tell us about that?
Yeah, this is, I believe, the fourth consecutive difficulty adjustment. And as you look at it, they're heading off toward the right on it. What we're seeing is that as more miners are coming back online, more hash rate, it requires a rebalancing, because otherwise, in fact, I think during the month of August, blocks were being found somewhere between 8 and 9 minutes apart, and the ideal is 10 minutes apart. So the difficulty adjustment is having a difficult time adjusting to the new hash rate coming on. It's faster than it should be. So we're going to keep seeing these difficulty adjustments happening. It's still profitable for miners to be mining, even with the higher difficulty, because the price of Bitcoin is also going up. We still, though, have less hash rate than we did before the Chinese miners were taken offline in the spring. Those miners, some of them are coming back on, but also what we're seeing, and I think I spoke about this a couple weeks ago too, is that the North American miners who were already ramping up their own capacity are getting the back orders of miners delivered to them, and they're getting them online now. So that infrastructure is slowly coming online and taking place. And we're seeing that reflected also in the hash rate. And that until that levels off, we're going to keep seeing the difficulty probably going up. And it's going up faster than anyone actually expected it to, as a recovery from when the Chinese miners dropped off.
We were talking earlier, Christine, it was really interesting to me that you mentioned that Chinese miners are trickling online, perhaps?
Some are. There is some indication, and it's speculative, but it's pretty good speculation, that, and this is something that has been reported, I believe David Pond from CoinDesk reported a couple of weeks ago, that because it's so attractive to keep mining Bitcoin right now, price-wise, there are a few miners who are, out in the boonies, shall we say, getting their hydroelectric power, and they're slowly, quietly turning back on their machines and mining a little bit. They're not ditching their machinery. They're not moving it. They're just keeping it in place and seeing how it goes. And they figure, let's turn it on while we've got it here. We're not sure how much longer that will last, though, because the rainy season is ending in China, and that is where a lot of the hydroelectric power comes from. And I don't see them actually picking up and moving those miners to the coal-fired areas. I think that might be a little too obvious. So we'll see how that plays out.
You can't shut down the internet, so it's a little hard. Anyone can turn it on. How about the average block times?
Yeah. So the average block times, as I say, they have been speeding up. We had a 4.5% difficulty adjustment because they're still pretty quick. Like 8 minutes is too fast. The ideal is 10 minutes. So even with the difficulty going up, the block times are still pretty quick, which means that Bitcoin is getting mined a little bit more quickly. So the rewards are getting paid out a little bit more quickly, which, if you're a miner, hey, the chances of you actually winning and getting that blockchain reward is a little bit higher too.
And finally, Christie, you have an update on Taproot for us in the latest upgrade.
Yes,
What's going on there?
Is. I mean, there's not a lot to say about Taproot now. It's been accepted. Everybody's going to be on board. It's going to kick in and it's locked in. It's going to happen in November. But it still requires that the nodes that are running the network, they still have to adopt it. They still have to upgrade their systems in order to enforce the new system that includes Taproot. And over the last couple of weeks, we were away last week, but the week during that week, the node adoption for Taproot has gone over 50%. As of today, we're looking at about 53% according to Taproot Signal. And I follow them on Twitter, and they give us a pretty good breakdown of how many nodes are actually enforcing Taproot. So that's a 50% rate, which is pretty good. We still have lots of time. So it's encouraging to see that the nodes are slowly coming online with that.
Interesting. All right. In other news this week, another big one was the SEC threatening to sue Coinbase, and Brian Armstrong is not keeping quiet about it. He made an epic tweet storm saying that the SEC was sketchy, not talking to crypto companies in person, even after, and specifically not talking to Coinbase, even after their IPO, and threatening to sue the crypto exchange if they launched their lending program, which offers about 4% APY, annual percentage yield on your crypto, and saying that it could run afoul of security laws, but not really explaining why, according to Coinbase. So Brian Armstrong mulling it over, saying that he thinks this is a land grab by the SEC to regulate cryptocurrencies versus other regulators. The SEC potentially doesn't have resources to offer guidance, and so they're essentially forcing companies to go through litigation and figure out, how to regulate crypto laws by trial by fire, I guess, fire by trial. Some on crypto Twitter are cheering on Armstrong, even encouraging him to launch the program anyway and go through the litigation. Others like Jim Cramer saying there's no use having a one-way conversation on Twitter and Coinbase should just stay quiet. An interesting developing conversation happening on the regulation side and the crypto innovation side, as we continue to monitor that. Also, looking ahead to next week, Christie, we're still watching El Salvador and how people are actually using Bitcoin for payments, and Lightning will play a crucial role in that. So maybe you can give our audience a rundown on how this is all shaking out and what to watch out for.
Yeah, one of the things that I found curious about the coverage, not on CoinDesk necessarily, but on a lot of the mainstream media, is there's focus on can Bitcoin manage, can the network handle El Salvador and potentially other countries coming online. But very, very little has been talked about in terms of how Bitcoin is itself handling the scaling issue. And I'm not saying it's perfect. I'm not saying that there isn't a lot that's of work that still needs to be done. And I'm glad El Salvador is on board, but also that it's not, say, the size of India. But what they are using are solutions that have scaling capabilities. For example, the Strike wallet is powered by Lightning. And Lightning is a scaling solution on Bitcoin that takes the bulk of the transactions off of the main chain, because we all know that the 1 megabyte blocks can't carry a whole lot of transaction data in each block, which only gets mined every 10 minutes or 8 minutes in this case lately. But being able to take the transactions off the main chain and put them on the Lightning Network and have those transactions go back and forth and all over the place before finally being settled on the Bitcoin blockchain really does help tremendously with the throughput and allows the number of transactions that El Salvador wants to happen off chain. That's not the only thing. They also have BitGo, which is a payment solution that enables batching transactions. So like Lightning, it enables SegWit, which takes a bunch of the transaction data, the signature data out of a transaction. It makes it lighter. You can put more transactions into a Bitcoin block. So instead of 1 megabyte, there's a theoretical 4 to 8 megabytes per block. So there are lots of solutions being done. And one of the things that you can do if you want to find out more about Lightning is next week, we have a mega report coming out from CoinDesk from our research department, and George Kalutis has put it together, and it goes into all the ins and outs of the Lightning Network, not just what works, but also where some of the vulnerabilities are and what some of the developers are working on. And it's going to be a great report, and it's really interesting to see what is being done in order to scale Bitcoin and allow for this kind of development and this kind of adoption to actually happen and work.
Fascinating stuff. All right, we'll be sure to be watching out for that report by Georgia, the CoinDesk research team. Brad, taking a look at the markets next week, seasonally, what are your thoughts on September? Traders are coming back from summer vacation. Will we see more activity this month or not?
Well, it's a similar dynamic that we're seeing kind of in the traditional markets right now. This was stocks were down this week, and a variety of things people are looking at there, from concerns about inflation to just perception that things were overheated to perception that maybe the Delta is hitting the economy a little harder than people thought. And we've got this Federal Reserve meeting coming up, not next week, but the week after that. But people really start to focus on that next week. And that, of course, is a narrative in the Bitcoin market, is, whether the Federal Reserve will keep the money printer going burr, or whether they'll start to dial that back or start to make noises about dialing that back. And the big story this week was that, John Williams, the president of the Federal Reserve Bank of New York, gave a speech that was almost identical to Jerome Powell's at Jackson Hole, where they basically were saying, don't expect the tapering announcement in September. Now people are saying maybe December. So, that could be a tailwind for Bitcoin, actually, as that meeting approaches.
Yet sellers seem to be in control of the $50,000 resistance level. So it doesn't seem that that is going to be broken anytime soon, unless you see some tailwinds otherwise.
We talked to Matt Blom at Equinix a couple of weeks ago, and his view was just more based on kind of psychological sentiment analysis, where you had all these longtime hodlers who've been hodling Bitcoin since it was $1,000, or whatever. And they've been holding on, and the price went up to an all-time high of 65,000. And then all of a sudden we were back down to 20, and so the idea is, as we get back to 50, people are like, okay, I'm definitely taking some money off the table at 50. And that's kind of the idea that, 50 could be a hard cap for a little while, at least.
All right. Well, we'll see what happens at the end of the year. All right. We got to wrap it there. Thank you so much, Christie and Brad, for joining me. Have a great weekend. Take care. That's it for All About Bitcoin. I'm your host, Christine Lee. Next week, we'll be broadcasting live from the SALT conference in New York, featuring interviews with Anthony Scaramucci himself, FTX CEO Sam Bankman-Fried, and more. Join us at 9 a.m., 3 p.m. Eastern Time for conversations with the hottest movers and shakers in the crypto industry. Have a great weekend, everyone. You're watching CoinDesk TV.